Hello everybody. Welcome to the weekend market briefing for Sunday, August 28th. We've had quite a week in the markets, obviously, quite a day on Friday. So let's get into this, take a look, see what's going on, and what we might expect to come this week. So everything we do here is for educational purposes only. We're not investment advisors and do not provide investment advice. All statements made are my own personal opinions and not to be considered advice to buy or sell any security. And all trading and investment decisions are your own and done at your own risk. All right, so we got that out of the way. Let's take a look and see what we've got coming up this week. On Monday, nothing really. There's a little bit of Fed speak here and there. Some of the Fed heads making speeches and whatnot, and I think it's one of them has something going on Monday, but shouldn't be terribly important. Monday, I think, is going to be all about the reaction to to Friday's price action, and reaction to Powell's speech will continue, no doubt. On Tuesday, we have a couple important reports. First, we have the CB Consumer Confidence report. We get a look and see, how are consumers feeling about the economy? How are they feeling about their jobs? Do they feel safe in their jobs? Do they feel safe going out and spend money? It wouldn't hurt to see a little downtick in consumer confidence, right? If consumers are maybe going to spend just a little bit less, then that will help get inflation under control. We also get to see, this is a big week for jobs data, actually, and it starts on Tuesday with the JOLTS job openings. So we get to see, how many jobs are available within the economy. And again, we would like to see a little bit of a pullback here, not too much though. It's kind of a Goldilocks thing, right? We do want to see things slow a bit because we know that will make Powell happy, but we don't want to see them slow too much. So on Wednesday, we get the ADP non-farm employment change. So, did the economy add jobs or did it lose jobs? We'll get to, and this is sort of an early look at the more official number, which is the non-farm payrolls on Friday. On Thursday, we have ISM manufacturing PMI. This is a good inflation measure. It's a price index for the purchasing managers at the manufacturing level. So this can give us a good indication of, the sense of the economy and how inflation might be affecting it. And then Friday, non-farm payrolls. This is the biggie of the week. This is a really important number. But, we'll see. Again, it would be okay to see this pull back a little bit, but not too much. So that's our kind of week ahead for economic data. For earnings, so earnings season is continues to wind down. We've got some stragglers here. I don't really see anything interesting here on Monday, either before or after, the market. On Tuesday before the open, we've got Best Buy. That one is definitely fairly closely watched. And we have BIDU on Tuesday before the open as well. And you may have noticed, we'll look at this a little later, but you might have noticed, this week that Chinese stocks really picked up and had a pretty decent week, especially relative to the rest of the market. It'd be interesting to see these numbers from BIDU. On Tuesday after the close, CrowdStrike, one of my favorites, and I know a favorite of a number of people in the Discord. ChargePoint, I don't think they've put it fairly high on the list. I don't think it's that important. ChargePoint's going to go up and down with Tesla and some of the other EVs, right? Chewy, I think, will be interesting. And there's some other names here that might be interesting to some people. Don't see much going on Wednesday before the open. After the close on Wednesday, we've got MongoDB and Okta. This, give us a little sense of what's going on in the software, software as a service kind of space. In cloud space, right? On some other potentially interesting names down the list on Wednesday after the close. On Thursday before the open, we got Campbell's Soup, big consumer staples company. How are the big food companies doing? Got Hormel as well in there too on Thursday. So that could be interesting on Thursday morning. On Thursday after the close, you got Broadcom and Lululemon. I think both of these are relatively closely watched as well. So still some interesting stuff going on for earnings before it winds down completely. But this is one of the last weeks I think that we'll find much that's interesting. All right, so let's move on and take a look at these markets. So we're going to start with looking at the major indices. We'll look at some important commodities, and then we'll look at the individual sectors. And a couple of stocks within those sectors, if they help tell the story of what's going on. And you can see I've got here any nice setups, and the answer to that question is no. We won't be looking at any new setups today, although maybe some of these things we might look at might be actually decent short setups. Tesla actually comes to mind as something that could be a half decent short, and we'll look at that in a few minutes. And that would be short-term short. Tesla's going to recover from whatever happens to it, I think. I don't think it's a long-term short, but there is a little setup there in Tesla that could be nice for the short term. All right, so let's look at the S&P 500. And we need that. There we go. So I'm starting here with a 5-minute chart. Because what happened on Friday was so important. I want to really kind of dial into what happened on Friday. So you can see right here where I've got the cursor right now, that is the open on Friday. Can anybody guess where Powell's speech was? If you guessed right here on this big red bar, you would be correct. So what happens when he makes these kind of speeches is right as he begins the speech, so right at 10 o'clock, they release the text of the speech and the highlights of the speech. So that comes out instantly. So the algos just get all over it, right? And then, a few minutes later, 5 minutes later, people have time. Humans have time to scan through these things and take a look. And you can see that, we initially sold off because there were a lot of fairly hawkish statements in this speech. Initially sold off on it, and then it bounced. And I thought that was quite interesting. I wasn't surprised to see some sell-off there on the release of the speech. But I was surprised by the strength, when they bought this, and I thought, wow, this is crazy. Okay, they're going to buy it, and then they started selling again almost right away. You can see they sold fairly hard, and then that just continued all day long. Just continued to sell off with barely a reprieve. Now, when I looked at the bullet points of the speech, I didn't really think it was that bad. Everything in there is sort of, yes, this makes perfect sense. This is perfectly logical. It's all stuff that's been said before. And to me, there was really nothing new in there. It was all a little doom and gloom, though, all at once. Whereas, after the last Fed meeting, he was more dovish. He was, he had a little bit more of a positive outlook on the economy and the market and getting inflation under control and whatnot. And I think what could be at play here is that these guys the Fed does not want to see the market market going up strongly, because that will make it more difficult for them to get inflation under control. So of course, the tools they have to get inflation under control are interest rates and tightening monetary policy. But one of the other tools they have are these speeches. They can try and talk the market down. They can try and talk consumers out of buying things to get inflation under control. And I think that's what was going on here. I think that Powell sort of saw just the market was just getting maybe a little too happy for his liking, a little too bullish for his liking, and he felt the need to do something about that. So that's not great for us going forward. Unless we start to see these inflation numbers come in, much lower. But I think that it's interesting. The response to this is interesting. I think a little overdone, although I do think it continues. And we should look at the daily here and see where we might end up. Because, all of this had happened on Friday, and we came crashing through all sorts of support levels, which you'll see when we look at the daily chart. Okay, so here we are on the daily chart of the S&P 500, the SPY ETF, and you can see this nasty big red candle, bearish engulfing candle. And we're going to see this bearish engulfing candle on just about every chart we look at today, okay? But what I really want you to take note of here is just how many levels we crashed through. It started with, crashing, coming down through this pivot at 417.5. Okay, no big deal there, right? Then when we came down through this support level, which is, the low of the previous day, the close and the low, or sorry, the open and the low of the previous day, the 21-day moving average, and, this support level that goes back in time quite a ways. We just sliced right through that. We sliced through this pivot here from Wednesday, this pivot low. Went through that like it wasn't even there. Came through this 382 retracement of the entire move down like it wasn't there, and came through this major support level. Well, this one's more of an area, but it did come through the the 100-day moving average and this next support area, and that's kind of where we ended up at the close. If the day had gone on longer, I'm sure we would have finished lower than this even. So obviously not good. This is now put in a lower high, from this high, and this really all started when we tagged the 200-day moving average here. So it's hard to be bullish about any of this. I think we've got more downside coming on Monday. I think that maybe, this maybe even goes into Tuesday. I mean, I wouldn't be surprised if on Monday we are hanging out around the 50-day moving average here. And there is some, there is sort of a minor support level in this area. Maybe we should get that in now. Kind of comes from, this over here. So yeah, a little very minor support and the 50-day moving average here. That probably catches it for a day. So kind of my thesis is one of the higher probability situations I think is that we continue down on Monday, come into this area, look like we might be getting support. On Tuesday we open, we spike down through here, we capitulate, and then come back up, and hopefully close above this minor support level here in around 400, right? However, that being said, I wouldn't be surprised if we come down and test the 395 area. And maybe that's where we capitulate to on Tuesday, and then come back up. But yeah, so I think, I'm pretty sure we've got more downside here. I really don't expect this to just turn and go, start going right back up again on Monday. Although that's entirely possible. It could happen, but I think it's unlikely. More downside seems like the likely course here. The NASDAQ will, of course, look pretty much the same. Now, we've been watching this big cup and handle on the NASDAQ. It's not broken yet. The handle is starting to get pretty deep, but technically, a cup and handle pattern is not broken until this handle retraces about 50% of the depth of the cup. It's still intact. It's not looking very healthy, but we are coming into support here. And much like with the SPY, I do expect this to come down on Monday and find some support, if only briefly, in this area, and maybe crack through on Tuesday, to capitulate or whatever. But we should be watching for some intraday support down in this area here in the 300 to 303 area. And if you're scalping or day trading, you definitely want to be marking some of these levels on your intraday chart. Carry them over, right? So that was the Qs. Let's look at the IWM, the Russell Small Caps. Again, we've been watching this big cup and handle, and the handle of this is still very much intact. The chart here actually looks better than some of the other charts, although this has already come into a major support area. If this continues down, it's tough to say where our next level of support is. This gap, I should actually get rid of that. That gap has already been filled. Maybe it finds support at the 100-day moving average or down to the 50 in here. Let's take a look at that again maybe later in the week. or as the week goes on, and see where we end up here. All right, the microcaps will look similar to this. If they pop up, here we go. Yeah, you can see, I mean, these were traced, these were traced basically, 3 quite nice up days. Retrace that with a bearish engulfing candle that's really, engulfed 4 days of price action here. So again, more downside expected on this one. All right, let's look at the volatility index. Of course, that has spiked up. Hasn't spiked up quite as much as one might expect, though. Like we're not that far above the high of the week, the high from Wednesday, right? But we did get through the 200-day moving average, which it had trouble to earlier in the week. We're not through the 100-day moving average yet. So it'd be nice to see the pace of this rise decrease, or even just hold here would be great as well. That would definitely be a positive sign for equities if this slowed down. Let's look at our 10-year yield. What's really interesting though here is, and one of the reasons I'm not maybe as bearish as I could be, that I think we might have a decent bounce out of this, is our 10-year yield. Look at, I mean, it came down, or it gapped up on Friday, and then it pulled back. A fairly small candle here, but you kind of would have, with the market pulling back as much as it did on Powell's speech, you would think that the bond market would be pricing in higher rates. And it didn't do that on Friday. So this is a bit of a divergence. There's something unusual going on here. The bond market is not confirming what the equity market is telling us. And I mean, you hear this, this market axiom that the bond guys are the smartest guys in the room. That they tend to get these moves in the overall markets right. So if that's the case, then the equity market has it wrong here, and the bond market is telling us that rates are not going higher, and that equities are a little too bearish right now. So this can give us a little bit of hope here. But if we start to see these yields go up again, then that would be bearish for equities. So in line with this, if we look at we'll look at our FedWatch tool, and this shows us what the rate hike expectations are for the next meeting, which is on September 21st, so about 3 weeks away. And you can see we are now pricing in a 39% probability of a 50 basis point rate hike at the next meeting, and a 61% probability of a 75 basis point rate hike at the next meeting. Now this 75 basis point probability only went up by about 15% on Friday after the speech. It really didn't move up all that much. We did flip from, it was more probable we were going to see 50 basis point hike, and it is now more probable we'll see a 75 basis point hike. But these odds didn't change that much, considering how deeply the equity market sold off. So again, this is also suggestive to me that the equity market, this is a little bit of an overreaction in the equity market. So that should give us a little bit of hope as well, that maybe things aren't as bad as they first appear to be. All right, I'm going to bring in the take a look at the dollar index here. And you can see on Friday that we've got a bit of a hammer candle here on Friday. We've been sort of consolidating up near highs on the dollar index. We do not want to see this go higher. That would be bearish for equities. It'd be bearish for international markets as well if this goes higher. So it'd be really nice if this does fail up at resistance here and starts to roll over and come down. If this comes down, this will be really good for equities. But if this goes up, we're going to see some more downside in equities. All right, back to our charts. Let's take a really quick look at some of these metals. We'll look at gold. You can see the gold is rolling over. I mentioned that gold was looking quite weak. It did rally for a couple of days midweek, but it rolled right over, right at where the 50-day moving average and the 21-day moving average are converging, and had a big red candle. We'll see that the gold miners are confirming that move. The gold miners are very near to making a new low, new intermediate low here. No reason to believe that they won't make this low probably on Monday. Silver, pretty much the same thing. Silver's quite weak. It's been rolling over, could make a new low. Copper, though, is still looking okay. I mentioned that we should be watching copper for a breakout of this consolidation, and you can see that it's got that little consolidation. Let me just highlight that here. We've got we've got this consolidation in the top half of a larger consolidation. Something I love to see. Something that usually, when it breaks out, usually works really well. And it probably was working well on Friday until Powell's speech. But this doesn't bother me that much yet. If we can come back in here, consolidate for a few more days, and then break out, I would really like that. If we get a second try at it, I would probably almost definitely buy that breakout. So I'm going to be keeping an eye on copper, keeping an eye on stocks like Freeport-McMoRan, which is of all the stocks around, looking fairly healthy. I mean, it had the big red bar on Friday. But it did outperform the market slightly, and it is still kind of like it's got a bit of a base there, and it's still hanging out at the top of its base that it had just broken out of. So yeah, there may be some plays in here. In copper, it's one of the areas that's looking half decent, but it could completely fall apart as well. So sitting on the fence on that one right now. What else we got? Okay, let's look at oil and our energy sectors, because that's really if we're going to be looking for any plays here, this is where they're going to come from, because they're performing better than anything else. They've even though they've come down on Friday, they strongly outperformed everything else. So here we have crude oil itself. You can see that this took a bit of a break on Thursday when it came into resistance and came into that 200-day moving average. Pulled back on Thursday, but actually had a green day on Friday. Volatile day, but a green day nonetheless. So that's quite interesting. If we look at XLE, the overall sector ETF, we can see that had a little bit of a pullback on Friday. But like I was saying on the Ticket Talk on Thursday, there's no reason this can't take a rest here. That it's had a really nice run, and we should expect it to take a rest. And this was only down just over 1% when the rest of the market was down about 4%, right? So strongly outperforming. Let's extend this trend line here. Okay, so this wouldn't even bother me if it pulled all the way back to this trend line. I think that would still be fine, and that would just sort of pulling back to the trend line would put it around at this gap, which I'll draw in here for you guys. So yeah, we'll want to if this continues to pull back, we'll want to watch this gap in this trend line. All right, XOP. So XOP, again, taking a little bit of a break, nice little consolidation up here, building a base, above a gap. This is all good, in my opinion. It's just building a base to break out and go higher. Totally cool with this. And oil services, ETF, it had a weaker day on Friday. But again, minor pullback so far, nothing to be terribly concerned about. Let's look at natural gas futures. We can see that these are still hanging out just under resistance. It tried to break out of there. You know, I talked on Thursday about how every other time they've come up to this level, they've pulled back hard from there. And this time when they came up there, we had one bad day when it tried to break, the day after it tried to break out with this big green candle. We had one bad day, but we're continuing to consolidate right up under this resistance. I really think this is going to break out and go through here in the next few days. If that does, it's going to take that whole energy complex with it. So yeah, worth keeping an eye on natural gas. A couple of the individual names that we're playing. Magnolia Oil and Gas. Consolidating, but consolidating on top of a base. I like the base on base. This is fine, this consolidation here. As long as this support holds, great. If that support doesn't hold, we do have some other areas below here where we expect to see support. Let's extend this trend line. That trend line would be one of the areas we're going to expect support. The 100-day moving average perhaps, or the 21-day moving average. So lots of support under here. No reason to be concerned if you're in this. No reason to be concerned just yet. But if it starts crashing through some of these support levels, kind of like the market did on Friday, then we would become concerned there and maybe have to stop ourselves out or reevaluate. If there's any big changes in this, I will definitely let you guys know in the Discord. EQNR is another one. This is the Norwegian gas company that we've been playing. And again, taking a little bit of a break here. Totally fine. Look at the move it's had, right? It's allowed to take a break. Nothing wrong with this at all. All right, TAN. TAN continues to be volatile as usual. Had a fairly deep pullback on Friday, but did outperform the market, right? It pulled back less than the market did. It's a little concerning that it did it before even getting up to that high. So we'll have to see what happens, but there are support levels below here. So I wouldn't be at all surprised to see, even if we had another down day, to see this turn up and continue on the way up. So not too concerned about here, but not too thrilled about playing this space just yet. Although I do have a position in TAN, I'm not looking to add to this anytime soon. Uranium is one that we were looking at because it had a fantastic day on some news out of Japan. But it is pulling back from that. It ran into resistance and it ran into the 200-day moving average and it started to pull back. And then Friday wasn't very good for it. It had a similar move down to the overall markets. I think this will continue down lower. We'll see what happens with this gap down here in the 21-day moving average. Maybe that can catch it. Look at consumer discretionaries. Obviously had a bad day. Big bearish engulfing candle, and just kept going too. It looks ugly. I don't know what catches this. This has moved into a gap here. Let's draw that in. So we're just moving now into this gap. Wouldn't be at all surprised to see this come down to the bottom at the gap at the very least. Maybe even down to the 50-day moving average before this even slows down. Industrials have been doing so well, and they had a really nasty day on Friday. Look at that, another big bearish engulfing candle. It's engulfing 4 days of price action. And this went up and looked like it was going to be attacking up here and just completely fell apart, crashed through all these levels, right? And through the 21-day moving average, crashed through those pivot lows, crashed through the top of this base that it had built. So this looks like it's going to have more downside. Now the first place you could look for support is maybe the bottom of this base with the 100-day moving average, but I don't know, man. I really think that this could easily come down to this 50-day moving average. So if you're in any of the industrials, be careful. Okay. Financials. Financials as a sector, we do not want to see putting in big bearish engulfing candles like that. I mean, it gapped up, it closed this previous gap, and then completely fell apart and engulfed the previous 4 days of price action. It's come into near the top of this base. Will it find support in there? I don't know. I think it's moving down lower, going to come down and test this 50-day moving average. So that's the first place I think that we should reasonably look for a bounce in this. Technology, it's not going to look any better, of course. In fact, it's one of the worst sectors. Or sorry, actually, technology was the worst sector on Friday. Technology was down 4.27% on Friday. So you can see it, crashed through all its levels. It is now, it just got through that 140 level, this level right here on Friday, but coming into an area where maybe we get some support. Again, I think there's more downside in this first, though, but hopefully one of these moving averages will provide some support for it. And maybe, we've got some nice little pivots up in this area here, which is right around that 50-day moving average, so around 138. So probably get some support there, although it could be brief. Communications sector, another very weak sector on Friday, of course. Not as weak as technology, though. Now, you can see it came down, just barely cut below Wednesday's low. But I think this is coming lower, and I think we're going to test these lows from back here in June and July. And if there's going to be a sector that's going to cut through the June lows, this is going to be the first one to do it. Hopefully that's not like the canary in the coal mine kind of scenario. Hopefully this can bounce off of this minor support level here before it gets down and test these June lows. Let's look at some of the FAANGs. So we've got Apple. This is, to me, Apple, this chart is the scariest one of all. This candle in Apple is just nasty. Apple had been leading the market. It had this beautiful uptrend going, and, we broke through that on Monday. And we started to turn back up again, right? We found some support at the 21-day moving average. We started to turn back up. It's like, okay, yeah, let's go close that gap. And it got about halfway into the gap when it rolled over on Friday. And did it ever roll over? I mean, this is a nasty candle in this. So again, it's totally reasonable to expect more downside here. How much more? I'm not sure. We've got the 200-day moving average right here. That should provide some support. I guarantee you, intraday, there is going to be buyers the first time it touches that 200-day moving average. And if you're a scalper, you should put that, mark what that level is. What's the 200-day moving average at right now? It's at 160.87. Mark that level on your intraday chart. They'll buy that. And, this sort of corresponds with this previous gap area. I think you initially get a bounce there, but if Monday's another weak day, it could get through there. And maybe it needs to capitulate and close this gap before it can move up again. But yeah, this is not what we want to see. This is not the kind of price action that we want to see from the leader of the market. Amazon looking weak, of course. It's moving farther into its gap. Okay, we talked about this gap. We talked about on Thursday how it was looking like maybe it's going to make its way out of here, and it moved right back in. Again, I wouldn't be surprised to see this come and close this gap, or at least attack these moving averages down here. Meta, my least favorite stock. So we had talked about how Meta seemed to be turning up, and this was on Thursday when we talked about it, how it had turned up before it got back down to the bottom of the range. And you can clearly see where the bottom of that range is, right? And how that was somewhat bullish, that it had made that turn. Well, that all seems to have failed on Friday, and it looks like it's going to come back down and test the bottom of this range again. Now, I suspect it'll probably find buyers again at the bottom of this range. And if you're a mean reversion trader, well, that's where you're going to be buying it, right? Expecting it to move back up towards the top of the range. Perfectly reasonable strategy, and if the market behaves, that'll probably work for you. Let's see, Netflix. So Netflix, had an ugly day on Friday. Underperformed the market a little bit, but we've been looking at this consolidation. We've been waiting for a break to the upside of the consolidation, and it to first close this gap, and then perhaps go up and start attacking this gap, right? This would have looked like a very reasonable play on the breakout of this consolidation. Now we haven't broken below the low of this yet, though, right? We probably will on Monday. Probably break out the downside of this. But do we break out and then go right back into it? If we did that, I would still be bullish on Netflix, and I'd still be looking to buy, a breakout of the upside of this consolidation. If we break out and continue lower and start consolidating down here, well, then all bets are off on this consolidation right here, and we'll have to wait for a different setup. But one day out of here and then right back in, this setup is still in play, in my opinion. All right, so Google. Google is another one, with the nice trading range. It looked like it was going, or it did, turn up before hitting the bottom of that trading range. And it looks like now it's going to come in and test the bottom of this trading range again. And I kind of wonder, do we need to adjust? Are we going to need to adjust this trend line? To these two lows here. This trend line above those lows has worked quite well, and it'd be reasonable for us to expect a bounce there. But I think that if that's our play, that we also have to draw on this other trend line now, because that may, if we come down and break through this trend line, we've got to watch out for this trend line here for support. So that was Google. Now Tesla. Tesla to me is like, this is kind of one of the better setups that I see, and it's a short side setup. It's a breakdown from this support level right here. That level, so it pivots off of this and then some pivots back here, right? So that level is around 286. I think on a break below 286, you could see a fair bit of movement, down into probably the 50-day moving average, maybe even all the way down to this support line here in around 255. So that's a pretty decent move. That's almost a 10. It's about a 10% move down to kind of the worst case scenario, which is this support line here. So that is a breakdown I would definitely be interested in playing. And so to me, this is sort of one of the short setups. Like the most of the other, like, you can look at lots of charts and think they look like decent short setups, but they've already had a big move. And Tesla, to me, hasn't had the really big move that a lot of other things have, and that's why I think there's more room to the downside. And there's a big kind of this sort of a big gap in here. It hasn't seen a lot of action in this area, between this support area and this support area, and you can see that with the volume at price here, right? We've got this big gap in here. So that's why I think it can move down through there fairly quickly. So I'll be keeping an eye on that, and maybe play this with puts or something if it looks like it, or when it does actually break down below this level. Semiconductors got really ugly on Friday. These way underperformed the market. Big red bar. The only positive thing here is that they closed right around the 50-day moving average without breaking through it, really. And then there's some support, a little bit of minor support just below that. But I certainly wouldn't be buying this here now. But we can maybe the momentum on this downside will slow. Hard to say. Semiconductors can be so volatile. NVIDIA that looked great on Thursday, that kind of looked like it was going to, try and save the whole space. Well, it completely fell apart, down 9%. on Friday. Ugly and crashing through support levels too. So this looks like it's got more downside to it. Maybe down in this 150 to 55 area here. What else we got? Yeah, AMD. AMD was a little bit better. Big red bar, still in this channel though. This is a bit of a downward channel, but you could call that a nice bull flag. That is all still intact. It's still above the downtrend here that goes way back. So not 100% bearish on this yet, but we want to see this trend line hold. We want to see it bounce off that off this former downtrend line and that 50-day moving average right there. And the one of the best semiconductors that we look at occasionally that had recently broken out, had a beautiful strong day on Thursday, had a really ugly day as well on Friday, but it's it's still above its breakout level. So I expect that this will find support in this area and continue to show relative strength. But if it breaks below this support line above the 21-day moving average here, then all bets are off on. Sorry, didn't mean the pun there. Okay. One of the other better looking sectors or subsectors is Chinese internet stocks. They had some really good news earlier in the week. They made some nice moves up, and looked great. So we had a little bit of a hammer here on what was that, Tuesday? So you can see right at the beginning, even on Monday actually, these things started to move up, and they really started to accelerate later into the week. Nice big candle on Wednesday, Thursday, big gap up, and another big gap up on Friday, and then pulled back with the whole market. But really didn't give back much more than their gap up, as you can see here. So what was this down? Yeah, this was down 1% on Friday. This was the best performing subsector. It outperformed everything else, even energy, I think. Yeah, actually, this outperformed energy on Friday. So this is another area we should maybe keep an eye on. Maybe this has given us a chance to buy the dip here. If you kind of miss this move, maybe you've got a chance to get in here. BABA's one of the obvious plays in this space. It had the big pullback on Friday, but should be some support down here, even if Friday's a down day, right? BIDU is a name that has have earnings or just had earnings? No, it's got earnings coming up, right? I think it's on Tuesday morning. Yeah, another one that had a really nice move through the week, although this came into resistance here and before pulling back. So maybe pulls down to these moving averages and bounces again, and then takes another run at this resistance. So yeah, there are potentially opportunities out there. You should be very, very careful though, because there's nothing in this market telling us that it's not going to roll over farther. All right, let's quickly just go through a couple more sectors. Let's look at healthcare. Ugly, ugly, ugly. I remember I've been telling you for a while now that I don't like, for whatever, I just don't like, I didn't like what was going on in healthcare, and you can see that now that uptrend is broken, failed right at former resistance, and is moving down quite rapidly now. Biotech, one of the subsectors within healthcare, pretty much the same thing, rolling over. However, the one bright sign here is that it is finding support, or did find support on Friday, right at the level, this support resistance level, the level of this base, this previous pivot. I don't really think it's going to hold, though. I wouldn't be surprised to see us come down and test the low range of this base here. REITs, very defensive sector. These had a bad day on Friday. Finding some support. We can see there's a little gap here. They're finding some support there for now. Wouldn't be surprised to see this come lower on Monday. Staples, Staples had a really bad day. Ugly candle here, crashing. Look at all the moving averages this crashed through on Friday. Down through the 21-day moving average, through the 100, through the 200. Threatening now to come in onto the 50-day moving average. So, looks like a little bit more downside in this. You guys seeing a theme with this 50-day moving average? You know, if the first major sector to come in and support on the 50-day moving average, if you see a bounce off that, I think we will see bounces off the 50-day moving averages in a lot of sectors and a lot of individual stocks. And finally, let's look at the utility sector, the most defensive sector of it all, and they're selling this too, right? You know, they're selling it. They're not selling it as much as they were selling others. This was only down 1.5% on Friday, whereas the overall market was down close to 4%. But, you know, still down, right? And kind of looking like it's rolling over, making, you know, made a lower high now. But probably finds support in around this 21-day moving average. But we can expect, you know, I think we should really, you know, expect a very volatile week, of course. We will have a bounce at some point this week. I suspect that bounces on Tuesday. And, you know, do we want to play that bounce? I don't know. It's hard to say. We want to kind of look and see what sentiment is doing. But, you know, we want to take we want to look at some of these internals within the market. We want to watch out for those bond yields, see what they're doing. We want to look and see what the dollar index is doing, and maybe take our cues from that. So, hope everybody has a good week. Just, you know, play it safe, be patient. This market will give you time to get in. I don't think it's going to rocket back up right away, you know, and more than likely we have a little bit more downside. So what have we got coming up? Let's go back over here. Take a look at our calendar coming up. Okay. We are going to be switching our ticker talks into Wednesdays moving forward. So it'll be the first Wednesday of September. I won't be doing a ticker talk this coming Wednesday or Thursday. If we get a big turnaround in the market on Tuesday or Wednesday, I may do a quick little market update video. You know, if anything, if we look at see any big changes, if we have any nice setups that develop through the beginning of the week, I may do a quick, you know, update video and post that. But there won't be a live session. And of course, I'll let you guys know in the Discord if I do end up doing a video. So enjoy the rest of your weekend, and be safe and be patient.